Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 19th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right now we're having quite a bit of selling pressure here already to begin the day and beginning Sunday evening, heading into the RTH Open on Monday. Down about nearly 1.25% here. A big move of 50 plus points. We're seeing a breakout from that narrow 3 to 4 day range we talked about and a big swoosh to the downside. But one thing I'll point out is this big day here is very reminiscent of this one, also reminiscent of that one. We've seen these types of days play out here, and then we've seen a follow back the next day, followed by a new high very, very shortly thereafter. Of course, this decline here on rising inflation, rising COVID cases of the Delta variant. But again, this market has been very, very buoyant overall. It has continued to remain resilient, and all pullbacks remain buying opportunities. So how much more weakness do we see? For today, the expectation is for further weakness overall, and at some point perhaps we develop some sort of trading range at lows and maintain that weakness, followed by the next day being a failed new low and a bounce back, a fade after trend day to the midpoint. Maybe a week or two out, we're at new highs. Again, if there's a failure to hold this previous month's midpoint, that's where things get even more bearish, and now you're taking out a previous month's low. So that's the ultimate key level there. That's around 42.11. Market has to kind of hold that zone, otherwise new lows likely ahead for the month. Now, if we take a look at the NQ also, let's pull this up, also down here about 0.9%, down pretty significantly off the lows of the day, but it had already been pulling back. This is about a 4-day move so far. The last time we saw a move like that was probably in here, maybe any of these moves, which was multiple days. But again, as we've mentioned before, this market has been very, very resilient. It continues to bounce back toward new highs. Perhaps we are at a cycle high. So if you look at this right here and kind of mark this lower line, you can kind of look at an upper line, kind of something like this. Perhaps we need to pull back a bit to this lower line before we can bounce. So the NQ tech heavy index here has pulled back a little bit more significantly than the ES overall, but still the same can be said. Buying the dips has proven to be the way to go with a new high ahead. Right here there is an LVN, CLVN here around 14,150, 14,200. We could drop as deep as that or into that 14K level, the FOMC key level, and the midpoint from last month, and still be a buying opportunity. So we could still drop another 530 points and still be seen as an opportunity to look to buy the dip. So right now, not expecting that at the moment. Looking for, again, further weakness today, perhaps holding the losses into the end of the session, but then perhaps looking for a failed new low and bounce heading into tomorrow's market. All right, let's take a look now at crude oil. So right now, crude down 3.5%. This one right now significantly lower. Huge move. We talked about this narrow range before. That range right here that it continued to develop. We also talked about this key range high and this key range low. And we mentioned that this range right here spans about 6 points. So if we were to break to the downside, it was forecasting a move of 64.50. Upside was forecasting a move to 83s. The fact that we're at a major CLVN in the higher time frame, if you go to a weekly chart, price has not been through this level in 5+ years. It's been a long time. So the natural likely response is for a turn down back towards 64.50 and perhaps build in here a bit more before it attempts a move toward 80. So right now, seeing that weakness here play out, we're still keeping an eye on this key range low right there, because any push back above that low could open up a return back to the highs. As of right now, we're looking at further downside expansion until proven otherwise, and failed new highs right now could be an opportunity to sell it back for a continuation towards 66 and maybe into that 64.50 down below. Lastly, taking a look here at gold futures. All right, here's gold. And it didn't take, so let's do it again. So here's gold futures. One thing you'll notice here, a pullback here today, but with a reversal off the lows. That's a pretty significant reversal that has developed only in the last 30 to 45 minutes. It's a higher low in the zone that I mentioned before needed to hold. So if we're looking at this from a key range level, you had this major lower low failure, then you had a push beyond this prior pivot high. It held it and held it again. This is what we mentioned last week. If we pull back, we want to see some sort of rejection that develops here that could lead to a push back up toward 1863.80. That's the FOMC from June 16th. We have another FOMC key level, a new one coming up, not this week, but next week. And that's going to give us another one here. We could be looking at a follow through back toward 1863.80. And from there, we could either make the move back up to 1925s, or we can continue to trade between 1800 and 1865 for a bit before we continue. So overall, very bullish here off the lows. A strong low developing for the day, which could mean a bit more strength ahead, not only for the day, but over the next 1 to 2 weeks. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trade room. Take care.